This is Bazaar Morning Call, broadcasting live from the CNBC TV18 Motilal Oswal studios in Mumbai.
Good morning. You're with us here on a fresh new edition of Bazaar Morning Call. We are coming to you live from the CNBC TV18 Motilal Oswal studios. I'm Prashant, and this Friday morning we have Rima with us, and of course Nigel as well. Guys, hi, good morning.
Good morning.
Hi, good morning. It's a Friday and the earnings season has ended. It's just period.
Indeed, and it's been a last couple of good trading sessions for the bulls. So let's see whether or not we can end this Friday on a high note. But besides that, it's going to be the weekend, so really looking forward to that.
Biggest smile reserved for the last. All right, well, let us quickly kick things off and tell you what you need to know as we begin this Friday, right? And we find ourselves in a pretty good spot. For the last almost fortnight, actually more than that, 3 weeks or so, the market's been ranged. Not really, of course, before that there was a slight amount of pullback. But since then, it's been kind of with about 200 points up, 200 points down, not really going anywhere. And finally, it does look like over the last two sessions that the market is breaking out. So, for example, there's a downward sloping channel on the Nifty, very near term, very short term. I mean, it's about, 7 or 8 days old. We've closed above it. That is kind of significant to note. I'll come to levels, etc., and address the question whether we're breaking out and we perhaps should look at all-time highs as the new level. But overnight, the handoff is pretty positive. So U.S. equities closed higher once again. And by the way, it's closing highs. The S&P, after a little bit of sort of shakeout post the CPI, is back at last Friday's closing levels. So the S&P was up about 0.6%. The Nasdaq was up about 1/3%. The U.S. 10-year, it still is very elevated. I mean, if you look at Friday to Friday gains, I think the U.S. 10-year would be up at least 15 basis points. And last night it was just a 1 basis point pullback, but 4.24, but flat. If you're looking at incremental day-on-day moves here. Dollar index was down meaningfully. I mean, that's nearly a 0.5% cut in the dollar index. So from knocking at 105 levels, we are back closer to 104 now. So that is a relief in that sense. You had data, the big data point, of course, was the CPI number earlier. And markets really got scared whether, this is, because this was not one-off. We had so much other strong data, and markets were starting to question whether the Fed essentially, rates will be high for the foreseeable future. Rate cuts will be pushed back further. January retail sales are weaker than expected. There is some weather-related element impact because the building materials sort of component within it, which is significant, slowed down. There was, and that was largely to do with the weather, as many have pointed out. But even then, X of that as well, these numbers are actually weaker. And this kind of sort of takes the heat off what I was talking about earlier, whether the U.S. economy is really overheated. At least, that was a narrative which was being built. It's just one data point. The big one, of course, is going to be the PCE, which is the Fed looks at very closely, perhaps more than anything else, but that is only, we'll get on the 29th of this month, towards the end of this month. Oil prices, they are back at about $83 a barrel, so that perhaps at the margin is a slight negative, so to speak. Now, in the very near term, I think we've been anyway treading water just a few percentage points under the all-time high. So, you perhaps get a line of sight for a retest of the highs at about 126. That's the previous level, not very far away. It's important, and I made this point over the last 2 days, and HDFC Bank, for example, after the lows at about 1350 has been showing signs of life. Yesterday was again 2% higher. It's important for large names like these to sustain and perhaps not come off, even if they don't participate too much on the upside, is to be steady and kind of build the base here because, they're large constituents in both the Nifty and the Bank Nifty. On the downside, if you want a negation level, that is 21,530, which the Nifty should not break. We put enough distance, some 400 points between that and where we closed yesterday. For the Bank Nifty, we closed above the 40-day exponential moving average and the 61.8% retracement as well. So here again, especially thanks to HDFC Bank, things look better. Resistance here comes in at 47,100, which is approximately 1,000 points out from where we are. And support for the Nifty Bank comes in around 45,645. So those are near-term, very short-term trading levels this Friday. I think the GIFT Nifty is indicating a higher start as we've seen over the last 2 days now, like clockwork. The gains, the GIFT Nifty shows a very large gain. At some point in the first 2-3 hours, you get a dip. Markets actually flatlines and that's been the time to actually dip in and buy if you're trading the index for gains over the next couple of days or so. Rima.
Hi, but broadly, the global market sentiment is upbeat. And you spoke about, the headline indices in US. Look at the Russell 2000. The Russell 2000 was up 2.5% yesterday. So globally also, the flavor in the market has been the mid and the small cap. It happened in the Indian markets. It's happening even in the US. Asia's broadly higher. So Nikkei, the Hang Seng, the Kospi, all of these markets have gains of about 0.7 to 0.9%. So in the green there, mainland Chinese markets continue to remain shut on account of the New Year holidays. In terms of flows yesterday, the DII's net bought 2,276 crore, while the FIs were net sellers to the tune of 3,000 crore plus in the cash market. But there were two large block deals, which we'll talk about in greater detail. Vedanta promoters sold stake amounting to 1,700 crore rupees, while in Yes Bank, Carlyle sold stake of close to about 1,000 crore rupees. We've also got a new listing today, Entero Health. And this one has seen muted subscription, fairly large size, 1,600 crore in terms of an overall issue. It also included an offer for sale, but the overall subscription for this company was just 1.5 times, so a bit on the muted side.
Well, that's right, Rima. We'll watch out for that one. But, in terms of trade setup, overnight, the troika, so to call it, they're pretty much in favor of the bulls. The Brent crude prices were a little bit lower. The dollar index was a little bit softer. And the 10-year yield, well, that cooled off as well a little bit, come down closer to around the 4.25% odd mark. So the troika in favor of the bulls if you compare it with the previous trading session. Yesterday, we did see another bout of short covering that played out, and bulk of that was on the Nifty bank. So for the second session running, on the markets, texture on the whole, we have seen in the futures market, there is some short covering that played out, and that perfectly ties in with what the FIs did. They covered close to 7,000 short contracts odd. They continue to remain net short with close to 64% of their positions on the short side. But if you look at it, in the last few sessions, the short positioning has come down. From around that 85,000 contracts odd, from 90,000 contracts, that's come down to around 75,000 contracts. So there is some short covering that's playing out. And the FIs, they have been covering their shorts. And we had mentioned this at the start of the series. The FIs are net short. They could get stumped on the wrong side. And at least till now, it's playing out perfectly according to the script. What else is happening? Let's look at the options data. The 21,900 call and 21,900 put, both of them are fairly active. So it appears there's a short straddle at play. What is that? You write the same strike on call as well as on the put side, and you pocket the premium. In this case, the premium is roughly around 320 to 350 rupees odd. So that's what you're pocketing. And the range you're looking at is 21,900 minus 350, 21,900 plus 350. So that's the broad range that some traders are playing for. It appears this strategy is at play. The stock that I'm looking at is Polycab. Yesterday in late trades, suddenly you saw the stock come to life. And in fact, it ended virtually at the high point of the day. So it was a big up move that we saw out there. And that up move was backed by a fair bit of delivery-based buying in yesterday's trading session. If you look at the delivery numbers, that looked pretty good. It was close to around 85,000 shares that got delivered yesterday. That compares with the average of around 50,000. So good delivery-based buying, fresh long build-up is what we saw in the futures market. And with that move that we saw in the final hour of trade, well, it crossed that 20 DMA as well. So the chart tells you the story. Can it move towards the 50 DMA? But in the near term, crossing that 20 DMA, well, that's something that looked pretty good towards the end of trade. So that's a stock that I'm looking at. We start off in the green, but as we have seen in the last few sessions, you don't buy the gap up. Maybe if you get a bit of a downtake, intraday dip, you look to get in that. But it appears the bulls, they want to take this market to fresh all-time highs, and they've been showing that at 21,500, they have considered it a bit of a base on the Nifty itself, guys.
Thank you. So far this week, the Nifty is up 0.6%, while the mid-cap index is down 0.1%. And the big gainer has been the CPSE stocks, the Nifty PSU Banking and the Nifty CPSE Index gaining more than 3% so far this week. Let's get to some equity calls then. Sanjeev Prasad of Kotak Institutional Equities says they find most sectors and stocks quite overvalued. He says the level of overvaluation increases in inverse order of market cap, quality and risk. The market seems happy to overpay for weak business models in a few cases and unsustainably high profitability in others, which highlights high levels of exuberance, only greed and low concerns about potential risk, no fear. He says they increased their weight on Axis Bank, HDFC Bank, State Bank of India, and they removed Canara Bank post the 78% rally seen in that stock in the last 6 months.
All right, well, trust Sanjeev to speak his mind. We'll get you some market, money market views as well. This is V. Lakshmanan, a federal bank, who says that higher U.S. inflation print with sticky core inflation has pushed U.S. Treasury yields on dollar index to a 2-month high as it puts off hopes of an early rate cut. He says the USD INR continues to trade in a narrow range despite a data-heavy week with volatility reaching multi-year lows. He's anticipating the rupee to remain ranged between 82.82 to 83.18 in the next few sessions.
On the bonds, he says domestic bond yields inched higher after the January CPI at 5.1% was along expected lines. He says the US 10-year yield touched a high of 4.33% as a bigger than expected rise in inflation deferred rate cut expectation. He adds the coming sessions could see the 10-year benchmark bond yield in a range of 7 to 7.15%.
Well, we've got a lot of stock-specific action to track. We get to that in just a bit in our special Top 10 segment. For the time being, let's run you through the list. We're looking at Vedanta, Sudarshan Chemicals, Bilcon, BL Kashab, ONGC and Oil India. All of them will be reacting to positive news flow. On the flip side, you have UPL, Interglobe Aviation, Sterlite Tech, as well as Yes Bank. They'll be reacting to negative news flow.